Hello there guys, it's been a crazy few weeks for the market, with Nvidia falling to 10% in one day and the market altogether looking very depressing and in the red. Now I can't say the same for my £17,000 plus portfolio held on Trading 212, which is actually doing very well at the moment thanks to one stock in particular that is actually in the green over the same period the market's been down. Now, if you're unfamiliar with the channel, I aim on investing in companies that are growing their free cash flows at a fast rate and have a competitive advantage in their industry. This can be financial monopolies like Visa has, or the e-commerce powerhouse that is Amazon. But in today's video, I wanted to talk about a particular stock that up until very recently was dragging my portfolio down. Despite me seeing something different about this company, others didn't seem to see it. Well, the market has now changed its mind, and this earnings season it's just been a massive lesson for me in terms of market sentiment and how down on their luck stocks can really jump based on the right kind of news. Additionally, I'll be covering my plans for this particular one and how it fits into my portfolio in general. Now, jumping into it, the stock that has performed so well in my portfolio over the past 2 weeks or so is United Health Group, if you didn't already guess. This one I've owned now for a couple of months and it's a touch embarrassing when I reflect on buying it. I bought the stock back in my taxable account because I couldn't add to my ISA back then. So I added around 8 shares around the $514 mark to $520 mark. It was down from its highs of $540 or so I thought in my head I was getting this fantastic company at a fair price. Well, in hindsight I probably should have held on for a bit to see the lows that would actually next come. For people not familiar with United Health Group and what they do, they are the biggest healthcare services and insurer in America and have outperformed the S&P 500 over the past 5 years or so. And the impressive thing I noted about this company when buying this stock was firstly their fast growing free cash flow. So over the past 5 years I want to look for about a 15% average, and this one fits the bill. Followed by their fast growing dividend and relatively low payout ratio. Then finally they have high barriers to entry for other competitors because not anyone can just set up a health insurer, right? So that's all wonderful, and when it initially dropped there was no overall reason, no news, no earnings report, so I didn't see anything wrong with the company and opened a large position that definitely should have probably been a bit smaller. At £3,000 that was nearly all of my free cash at the time, and I think I just wanted to go all in on a stock and chose wrong. So after a few smaller successes like Texas Roadhouse and Microsoft, I just felt I had to go big and chose the wrong one. So I buy my shares and then they have their earnings report back in January 2024. Now I won't go into the fine detail of this report, but they beat in lots of ways, but disappointed only really in one, and that was medical care service ratios. So basically it came in lower than analysts expected, around the 85% mark is what they was expecting, and they actually achieved around 83.88%. People forgot about the massive gains in revenue and just focused on this fact and took this as a massive headwind for the market of healthcare in general. So the stock fell to below 500 for the first time. Then we start to go up again as people buy the dip, and then disaster again strikes on February the 21st when United Health has a cyber attack that leaks loss of information and shakes people's faith in the company. Investors know this comes with fines, so not only is this company facing rising costs from Medicare ratios, but now it has to sort out the cyber attack. So the stock price falls again another 6 to 7%. Then we have only 8 days of grace before United Health do it again, and it's announced that they have an antitrust investigation being launched against them. So in the space of about a month, United Health has had 3 bits of bad news according to investors. They've had rising medical care ratio costs, they have a cyber attack that will cost them a lot of unknown money, and finally they have an antitrust investigation that could go on for years by the DOJ. And that just might break up their business in general if it goes particularly badly. So why would anyone really want to invest in them now? Well, I would, because these sentiments change so quickly and it all revolves around how a company performs financially. The the share price will follow the financials. But up until now, I've seen no real problems with solely the financials alone. The ratios were talked about by the company and explained to my satisfaction, so really we're just waiting to see the impact of the next earnings. So now we fast forward to the 16th of April. They release their earnings and they do really well, but the main focus is on the guidance, which remains the same, so no downgrade, and the medical care ratio, which comes in lower, not higher. Still not meeting analyst expectations, but not going up, which is what people were looking for. Finally, their positive results were despite the cost for the cyber attack being estimated around 1 billion and paying some of that already. Well, this flips the narrative on its head. It's gone from a company in the midst of a massive crisis to undervalued stock that's just ready to be bought. The stock price is now up for the week around 12.64%, which is massive when you consider the sentiment change. And that's just because people have changed their minds about the company and need an excuse to buy. Even more impressive, this is when the market is actually in the red by quite a bit over the past 2 weeks, over the same period. Therefore, this stock recovery is the reason my portfolio is actually in the green over the past 2 weeks, unlike the market itself. Now, what do I plan on doing with my shares? Well, going through this period of decline is the biggest part of my portfolio, gave me a sort of insight on my risk tolerance and knowledge surrounding this stock in particular. I've studied this stock by quite a bit, and yet I don't know enough about the healthcare industry in general and how this company generally makes money customer to customer. It's as simple as that, and it's far too complex to keep a focus on in my mind. When this stock dropped, I actually believed it would recover, but it certainly didn't make me sleep well at night because I didn't have the correct conviction in this stock for it to be my top holding. So I've decided that once this reaches a certain point in share price, and I'm in the green by a sensible margin, I'll sell part of it, if not all of it. Now, I'm sure that's crazy when the stock's finally being successful, but I need to have the conviction in my main holding, and I don't have that in this stock. If it's going to be a big position in my portfolio, then I need to have faith in it. If it was Visa, Microsoft, or even S&P Global, I don't think I would have had the same innate reaction to this one, because I have more knowledge and conviction around these investments, and it actually just makes sense in my mind how they make their money. Therefore, they deserve to have bigger positions in my portfolio, so I'll be doing some rebalancing maybe in the next couple of weeks. I'll actually maybe, who knows, buy an ETF and do what actually everyone recommends. Anyway, thanks for listening, guys. Best of luck with your investing, and I'll see you in the next one.